Many in the market applauded the decision by President Biden to renominate Fed Chair Jay Powell. They pointed to the removal of the uncertainty and continuity of policy, but there are considerable questions surrounding the Fed and its policies over the next several months. We have the question over the pace of the taper. Some want to speed it up, the timing of rate hikes. And, of course, a lot of new Fed members coming on board. Standing next to the president yesterday when his renomination was announced, Powell made clear fighting inflation is now a major policy focus.
We know that high inflation takes a toll on families, especially those less able to meet the higher costs of essentials like food, housing, and transportation. We will use our tools both to support the economy and a strong labor market and to prevent higher inflation from becoming entrenched.
Among his options, speeding up the taper, two Fed officials have said they want to talk about it at the December meeting, and faster rate hikes, which would go along with it. Increasingly, the market's pricing in the first rate hike as early as May. But Powell's going to need his committee to agree, and there are two interim bank presidents and three open spots on the board of governors for President Biden to fill. Ian Shepardson, writing this morning from Pantheon, says you can be pretty sure they will be dovish Democrats who will offset the clear hawkish shift among the regional voters next year, which is to say a series of regional voters replace the hawkish regional voters, presidents replace those who are leaving this year. The White House said those new appointments by the president will be made early next month. And what may be most important to talk about here is the growing political consensus over the threat of inflation. It does give Fed Chair Jay Powell and the Fed a political green light to fight it, Becky.
All right, so if this is a situation where the Fed board is going, or the voting, the FOMC is going to be a more divided board, I don't know that I recall seeing a situation like this. It almost seems like the board goes along in lockstep. That's not to say that there aren't disagreements, but it always seems like it's very congenial, very collegiate, and that the Fed chair is kind of able to move things the direction he or she wants to. Is that not necessarily going to be the case here? Is Jay Powell going to have his hands tied?
So that's a really good observation, Becky. And the way it happens is the reason there is not a lot of dissent is because typically you have a chair who works to make it so that there isn't, right? You do not want to go forward. I think the most dissents I may have seen over the years is 3. So what do? You go and you talk to your policy members ahead of the meeting and you say, what can you work with? What is it that you want? And you fashion compromises. And sometimes there are lines in the statement like, we're going to do this down the road, that is put in there specifically to mollify or get the votes of a hawk. So it's really up to the chair to bring the committee together, which is to say that it could be tougher for Powell depending upon who the members are and what they want. And you could have a divided Fed. Or more likely what happens is policy comes to the place where you get a consensus among the board members.
Steve, looking at the history of the of Fed chairs, I think it's probably a pretty good time. I wasn't that involved back with G. William Miller or whomever it was, someone that really, the last time we really vilified a Fed chairman. But in general, it's great to be a Fed chairman during the easing times, and it's really not a great job to be a Fed chairman when you got to take the punch bowl away. And I think some of them have walked away from it where they've said, you know, who needs this, knowing what was ahead of them. And I just kind of get the feeling that aren't we possibly in that type of cycle where the next moves are going to be ones that people don't like? And that, you know, could cause some pain in the economy. Like, think of what Volcker, that took a real spine. He had to be like 6'10" or whatever he was to go to whatever, to 18% Fed funds, wherever we were back then, to break the back of inflation. But that was not a popular thing to do at the time.
No, and I was yesterday, Joe, looking up the history of this, because what I wanted to know is when Jimmy Carter appointed Volcker, did he know what he was getting into? And there's a funny anecdote that I read yesterday, which says that Volcker, when he met with Carter for the first time, thought he blew the interview because he talked about the need to raise interest rates and to slow the economy down to fight inflation. Carter picked him for just that reason. And that's really instructive to me because as I watch over the years when the Fed does raise rates and how it raises rates, The political consensus around that is very important. We have a gathering political consensus in this country right now of fighting inflation. Yeah, you're right. It's not easy. It's never fun. It's difficult. But the idea that you had President Biden there talking about inflation, Powell got up there and talked about inflation. You have this idea that we need to do something about it. It makes it easier and more possible. Why did the Fed raise by 1/4 points in the early 2000s? Because there was no inflation. Greenspan was trying to get back to a normal rate, but he didn't have the inflation impetus to move him along. I think the market may be coming to terms with two things. One is that inflation is high, and two is that there's this political consensus around doing something about it, which leads to three, the idea of potentially faster rate hikes.